Morning traders. Gold just experienced its worst single day crash since 2013, dropping like 8% plus from the record high after forming a double top here. And there was weakness on the RSI on the 4 hour chart. And we went down to around the 400, the 4,000 per ounce level. Very strong support and likely hard to give in to bearish pressure, but it's going to depend, of course, on different catalysts. The one closest to us is Friday's CPI report. After a lot of reports, of course, on economic US data have been delayed due to the government shutdown, which is still ongoing, which adds uncertainty, which was one of the drivers for gold's move to the upside, since fiscal uncertainty remains a concern. But here's the question: is this just a reversal, or is it actually a reversal, or just a healthy correction due to profit taken? Let me break it down: what happened and what's next. First, we have had, of course, de-escalation between US and China. Trump and Xi are going to speak, to talk in South Korea at the APEC meeting. So that is a positive catalyst for the markets, for risk on assets. Not necessarily bearish for gold, but it takes away some of the risk, if that makes sense. Second, technical overextension. We have had a double, prices really extending on the RSI, not just on the 4 hour chart. We're looking at the daily overextended. We're looking at the weekly overextended. We're looking at the monthly overextended. Any way you look at it. We will focus later on the weekly a little bit, but let's just go back on the 4 hour for now. So the RSI was really screaming here. So that was that attempt to go overbought, which was weak, did the job. A lot of people secured profits, okay, ahead of the CPI report, because markets are already pretty much just like position ahead of that report. Consensus expects inflation to tick up to 2.9 from 2.7. Okay, so regardless whether we beat expectations or not, this is still 20 basis points up from the previous. Okay, so if it comes even hotter, let's say 3% or 3.1, it will really affect the December rate cut expectations and strengthen the dollar. That would be, of course, negative for gold. So the drop we currently see brought us down to, actually it missed the 4K. So maybe we're going to see another leg going down here. Okay. But personally, I don't think we're going to go really much lower than the 38.2 Fibonacci. This is still considered a pullback. I would say 23.6 was really shattered in one go anyway yesterday, but now 38.2 is our next level. Okay, so I would even go and say 3945. That's the lowest level I would be expecting to see prices going to, regardless of what happens with the CPI, because it's likely that the CPI is going to meet expectations. Okay, which means it's going to be neutral for gold, and then it will be more like a situation where we want to see retail and institutional demand coming back in. When are they going to come back in is the question. So what are the scenarios here? We have seen a buy the dip scenario already in the short term. Okay, and we have actually drawn this channel maybe 2-3 weeks ago. I'm not too sure, and it seems to be holding for now. Okay, so buyers did step in and the moving price is higher. Now, if we do break above that channel, doesn't necessarily mean we're going to go and do a new high. But if the CPI report um, is dovish, then that is a likely scenario. If the CPI report is hawkish, we're going to see another leg down. In the meantime, because we have Wednesday, then we've got Thursday and some of Friday session, I think we're going to consolidate. And because volatility is back with that large move, right? We might see prices going back up, coming back down. And then obviously this consolidation could really last, because really. We have seen gold really moving up, really nearly 60% since the start of the year. What is like 8%? It's like a very, very healthy pullback. Okay. So the bullish case is, um, well, apart from the CPI, of course, you've got escalation in tensions, in trade tensions, okay, or even in talks between Putin and Trump, supposedly. They're going to talk. We don't know yet when. The bearish case is hot CPI, dollar strengthens, gold breaks the 4K, okay, and that means it opens the door to 3,850 or so, perhaps even lower down. But we don't want to go lower than that. Just pay attention here, though, that we're looking for a short-term reversal, right? And we're looking at this move to the upside, this leg to the upside from the last leg up. We're not looking at this from any lower back. So if we do go lower back, okay, this is the last leg following this triangle pattern, okay? Now, if you look at the RSI, momentum was lower here, momentum was higher here, and momentum was also kind of, lower at this level. So this suggests that this is likely a third wave, okay? And what this essentially means is that if this is a third wave, we might want to even take the first one down from, I mean, let's just not go that far, but the largest correction we saw was here. So we want to go and check the longer term leg, right? And that brings us down to the lowest level, I would even say, that we're going to see in this run and perhaps for the following years, down at 3735. Now, that isn't even going to be like quite of a hawkish Fed and a lot of de-escalation taking place. And I would see this play out in this manner. Okay, but I don't really expect, sorry, I would be like that. Yeah. I wouldn't expect prices to go much lower than that. Okay. That is like probably the bearish case, to be fair, for gold. Um, so that is the one leg. So this is, if this is like, the one and the two and the three and the four, it's actually not likely. This is probably the one and the two. That might be the case. That all of this might be the third wave, right? Which means, guys, and this is like a more of a neutral situation, that gold could still go there, but consolidate in the longer term, and then break to new highs, because we do see a correction here from 2020 to 2022, a 2-year correction, right? The largest after is the correction we saw from April 25 to August 25. Okay, so multi-month. So I think, given that where we are currently, okay, on the daily, it's not impossible that we might see a consolidation here taking us, really lasting a few months. If we look at the weekly, which is something that I have been looking with interest over the past few weeks, because I identified a 9-wave bullish week structure here, and we did say that we expected to see some sort of correction anyway, and we did come and retested below that week. Okay, so the weekly levels are very important. So what I would be doing next, I would be actually coming down to the previous weeks, the week before low, 3888, and then of course that's the one we retested already. It's important, and I repeat, it is important that we actually came and went below that level, even if it was a test. It was initial test the first time. So this adds a little bit bias to the downside. If we had a candle low that didn't go as far as that price, then it would have been a bit more biased to the upside. Anyway, you might be now considering how I'm going to trade this. Well, the truth is that this is very volatile. Okay, so if you are interested in the short term, this is the top, probably, right? So, and this is the first wave to the downside. So if you want to short this, and you have to do this with effective risk management, because obviously we are in a bullish cycle. Typically, we would look at the 38.50 or 61.8 retracement, and then another leg down. Okay, so without knowing currently where we're going to stop, what we do know is that we stopped at 4163, just above the 31, the 38.2, which is a pullback to the downside. This means that the extension could take us to initially the previous low 3930 and then 3785, which actually is close to the level we identified earlier. So I see potential short term to the upside, okay, and then potential decline towards below the 4K, okay, and if we have buyers stepping in at 61.8 over this area, then we'll be looking for long positions. Otherwise, if not, and of course the catalysts are bearish for gold, then we'll be looking for prices to go down to 3785, and from there, of course, look at getting into that trade. For now, and in the short term, the question is, how does this look? Well, to me, it looks like that with this divergence, we could see this going higher up, okay, but likely to meet resistance at this channel or 420. Okay, so at 420, which is also a retest over here, right? I will be looking to go low. The other scenario would be for going lower again after retesting that level, and then finding support at the 23.6 slash median channel, and then move up to the 161, to 50 and 61.8, perhaps even higher to 78.6. Now, let me tell you something. If we do go above 61.8, the chances of a consolidation are going to increase. If we go to 78.6, then it becomes more likely that we're going to see a consolidation lasting. Okay, even if we do go up to the previous stop, that will still remain the same case. Okay, because the idea is that we are overextended anyway, and even if we do see prices moving up to the previous high, only if we see momentum and volumes coming through at the top, this would suggest that we might see another leg to the upside. But everything really is tied to fundamentals. Okay, it's not just about fiscal uncertainty or the trade war. It's also about losing trust in the dollar. Okay, and that has been the case over the past year or two, which makes gold act more like a currency rather than a safe haven as well, because you see gold and equities are up at the same time. Okay, so which is not a really typical thing to see. So that's your gold crash analysis from myself. Volatility is back. Trade smart, respect the levels, and catch you next time.